Good morning and welcome to the Area Securities Fundamentals Update. Beginning with Asian session today, New Zealand jobs report were released with mixed figures, but the overall outlook remained positive. The employment change increased by 0.9% in Q1 comparing to 1% in Q4 last year, which was revised down from 1.1, while it had been anticipated to rise by 0.6 only. The unemployment rate also unexpectedly stabilized at 6% in Q1, while it had been anticipated to decline to 5.8. And the reason behind this stabilization is that the participation rate is spiked up to record high to 69.3%, which seemed positive on the longer run. As for the wages, including overtimes also, it increased less than expected by 0.3% comparing to 0.6 in Q4 last year, while it had been anticipated to increase by 0.5%. In Australia, retail sales came in with the disappointment figures, rising by 0.1 in March comparing to 0.3 in February, while it had been anticipated to increase or to rise by 0.4%. Finally, in China, HSBC Services PMI slowed further to 51.4 in April, down from 51.9 in late March. Going forward to the European session today, we will be focusing on key economic releases from Switzerland, France and Germany. Switzerland unemployment rate is expected to remain stable at 3.2%, and France industrial production and Germany factory orders are expected to increase by 0.3% in March. And finally, France trade balance deficit may increase to may widen to 4 billion euros in March, up from 3.4 billion euros in February. As for the U.S. session today, there are also a few economic releases, but all eyes will be headed toward the Fed Chair Yellen testimony later today, which will take place around 14 GMT time, which is around 18 Abu Dhabi time. In Canada, building permits is expected to recover some of its recent declines, rising by 3.9% in March after it crashed by 11.6 in February. In the U.S., non-farm productivity may decline by 0.9% in Q1 comparing to a rise of 1.8 in Q4 last year. These are the economic releases for today. Any impact is likely to be limited and short-lived as the concentration is toward a Yellen testimony today. This is it for today. You can follow us on our social media sites, Twitter, Facebook and YouTube to get the latest economic releases, reports and analysis. Thank you for watching.